Welcome back, and joining us on the show now is Carlos Mera. He's Senior Commodity Analyst at Rabobank and he joins us live. Carlos, hi, and I want to start with the cocoa prices because we've seen prices gain up by almost 150% in this year in 2024. What is your sense from here on in sense of prices? And because of these all-time high prices, has the demand taken a hit?
When stocks get low, we should expect price to be very, very volatile. That's commodity 101. And that's what we're seeing and what we've been looking at. Not only a situation of very high prices, but also very volatile. And to your question about demand, demand expectations are all over the place. We recently had the Q1 data release for the EU and for the US. So very surprisingly, very bullish as well. We had actually only a 2% drop in the EU, and we had actually positive demand numbers in the US, which is pretty incredible given the prices. So demand, of course, most of the cocoa sold in Q1 had been contracted many months before, and I think it's only in Q2 and Q3 that we are going to see more demand destruction.
All right, so nobody's letting go of their cocoa and chocolate cravings there. But from here on, Carlos, what's your sense on prices? 12,000 done, what's the next level?
I think we're probably closer to the top. This is not an analytical framework that we can use in recent times. I mean, I've been looking at the cocoa market for the last 15 years. There's nothing that I can compare to. If we look at the stocks-to-use ratio historically, we expect the stocks-to-use ratio to go from the 30+% in previous seasons to 24%. That's more than 10% difference and distance. We will be looking at prices in present terms of about $14,000 at the lowest point. I think that should be the maximum top, because at the time, the stock-to-use was close to 20%. So I don't think cocoa prices can go much higher than they are today.
That's good to know. Moving on from cocoa, and it's coffee which also catches eye, because here as well, the global prices are trading at an 18-month highs. Here as well, there are concerns about crop. What are you hearing, and what are the fundamentals supporting this price?
The coffee rally has been fueled by funds, and it's probably the same funds that have been taking profits in the cocoa market throughout 2024, that they've been looking at a potential rally in coffee. The coffee rally study on the Robusta side, Vietnam, the Vietnam internal domestic market is very, very tight. Vietnam is the largest producer of Robusta, and domestic prices are very, very strong. We see record high differentials. And that, of course, was exacerbated by the disruption in the Red Sea, which disrupted the flow from the largest Robusta producer. Indonesia is number 3 Robusta producer into Europe. So very tight situation in Robustas. And Robusta prices got so close to Arabica that they now started to push Arabica prices up, because that's the ceiling. So the arbitrage is at very low levels, and these are all coffee rally rather than one or the other quality. And we expect the same as in cocoa. We do expect some demand destruction here and there, but coffee demand is certainly not looking very strong.
All right. So while the cocoa and the coffee prices have continued to run up, there is some respite, though, that we've seen in case of sugar prices, where the raw sugar global prices are trading at a 14-month lows right now. Here as well, the funds have taken some profit taking. Now, from these current levels, what's your sense?
Yeah, we saw a big drop in prices from 26 cents per pound to currently some contracts trading below 20 cents. It's hard to find enough justification in the fundamentals for this. We have had a massive sell-off from funds. The change in the Indian ethanol policy was the start of that price drop last year, and we have probably better crops than expected in India, but especially in Thailand. However, I think the market is seriously downplaying the risk of the adverse weather we've seen in Brazil, where it has been much drier than normal during most of the wet season. I think that will be in the market throughout the rest of the year. The harvest season in Brazil just started, and I think that will be supportive for prices. So I remain bullish on sugar prices.
Okay. A final question then, Carlos. And while, of course, we are looking at weather and supplies and crop and demand as well, but there's a lot of macro fundamentals as well impacting agriculture. So whether it has been about the dollar index gaining or the interest rate cut expectation in the second half of this year, all the geopolitics for that matter, how are you all of this impacting agri-space?
Well, certainly the strength of the US dollar is very, very important, especially for grains and oilseeds, corn, soy, and wheat. We're looking at a very, very good start of the planting season in the US. It's raining all over the place. So the strength of the US dollar will decide how much of those stocks will remain in the US, because the US has been relatively uncompetitive exporter for the last couple of years. So that's certainly something to look at. The other thing is the tensions in the Black Sea that have been increasing. There have been just last weekend bombings on Odessa, and that damaged some port infrastructure that could be very supportive, especially wheat prices. When it comes to the soft commodities, probably the biggest issue here is the Red Sea. We expect those tensions to remain. I mean, there's no political will to sort the situation out. That will probably require much larger and coordinated military effort in the region, and that will continue to affect, especially Robusta and overall coffee prices and the flows there. But it also affects all different commodities in different ways. Like it may affect, for example, white sugar flows. It might affect the trade of cocoa products in the area. We normally have butter coming from Asia to Europe and powder going from Europe to Asia. So that I think that will remain in place, and that's supportive of those commodities.
All right, so the cocoa, coffee and the sugar prices can gain from here. One, there is supply disruption, the demand seems good. And then on the other side, because of the Red Sea and geopolitics, we also are looking at the freight rates going higher and the travel time also trading on the higher side. And that could support all of those commodities. Thank you, Carlos, so much for joining us with that sense. But with that, it's wrap on Halftime Report. Business Lunch will take all the action ahead.